All right. Hey, everyone. I'm Jim Hiltner. I'm the head of sales at Compound. Want to welcome everyone to the first edition of Compound Thesis, where we will discuss the intersection of crypto and the capital markets. Our guest today is Morten Fylkesnes, and he's the Treasury Manager at Nansen. Prior to Nansen, Morten was a trader at Norges Bank. For anyone who might not be familiar, Norges is the world's largest sovereign wealth fund with over $1 trillion in assets under management. Morten, welcome to the show.
Thank you, Jim. Thanks for having me on.
Good to see you. Well, I thought it'd be fun for us to start with a quick little icebreaker. And I know you're sitting in lovely, lovely Singapore, although we were just talking about I've never been. But if you could work anywhere in the world for, call it 3 months, no constraints, with no, regardless of Wi-Fi or any of that, where would it be and why?
Yeah, I was thinking about that. And, you have these crypto people like to say that you need to touch grass for a change of the 24/7 hustle of the markets. And I think for my 3 months, like you said, I've been in Singapore for a while now, and I'd go somewhere less urban, less humid, with a change of scenery. And one place that is really remote and has colder temperature is the northernmost town in the world called Longyearbyen. Literally means Longyear town, and that's in the northernmost part of Norway. So I never been, and I just think it would be a pretty cool thing to have a chance to work under like Northern Lights condition. It's a pretty spectacular experience.
Yeah, that as somebody who's sitting right now the northeast of the U.S. up in Portland, Maine, it is quite nice to touch grass every once in a while after being in the city for quite a bit. So anyways, I want to dive into your role a little bit. For the audience, can you share what Nansen is and what your role is there?
Yeah, of course. So Nansen is the leading investor-focused blockchain analytics platform, and we enrich on-chain data with millions of wallet labels. So I think we have over 130 million addresses tagged now. And so retail and professional investors will use Nansen to discover new investment opportunities as and when they come on chain in real time, as well as look at what other, call it smart money, are doing, as well as sort of defending your own portfolio with real-time dashboards and alerts for any events that might be actionable. And for myself, I guess in like one sentence, as the Treasury Manager, I look after the company's liquidity, funding, and investment activity. On a bit more like day-to-day basis, it's basically split into two. I hand the cash management part, which means having the sufficient working capital, maintaining all our counterparty relationships, both on off-chain, and act as a sort of advisory on the financial strategy for Nansen. And the second part, which I think is more the focus today, is investment and location of the treasury portfolio. And I think we'll get into some more details on that.
Yeah, I don't want to jump too far ahead of it, but certainly in an interesting position, given your history working at Norges, managing both TradFi and digital assets, and just using the public information available on the blockchain and just all of the great information available at your fingertips served up so, simply by Nansen software. So we'll dive into all of that here in a moment. But I think, most of us are curious. You were at Norges for a while, and, I'm sure a lot of people are wondering, what made you take the plunge into crypto?
Yeah, no, it was a hard decision because it's a great place to work with very smart people, and like you mentioned in the intro, it's pretty cool and exciting to manage a portfolio that owns like 1.5% of all the listed stocks in the world. So I was there on my 8th year, and actually making the switch came down to personal and career growth perspective. So my crypto background started in 2017 and kind of had a break until I discovered DeFi again when that was coming around in 2020, 2021. And I was pretty excited to see some of the resemblance and improvements of what I was doing as a trader. And I thought, here's something that's the future, and it'd be really cool and important to have sort of the digital asset management skill set and tools in the box. And I think around the same time, and this might be the other reason then, is I became friends with very energetic and convincing co-founder of Nansen, Alex, who was building a really cool product, and I started using that myself. And so when Nansen's treasury over the year of last year had grown materially after 2 successful funding rounds, we started discussing a role for me and Nansen, and we found something that was really exciting that I just couldn't pass on.
Yeah, I mean, I typically break down any opportunity with 3 Ps. It's people, problem, and product. And it sounds like Nansen certainly checks the box on all 3 of those categories for you. So kudos to you in landing a great role. And, I think you straddle an interesting part of the ecosystem. And you mentioned there having some exposure to, expand a little bit from your past, from traditional assets into the digital space. And, kind of taking that lens of a holistic view of Nansen's balance sheet. Can you just give us a little bit of insight into just how you go about setting the strategy for investing the treasury?
Yeah.
Piggyback off of it, sorry, I'm just curious, like, have any of the recent events over the last, 2 months or 3 months now affected your investment strategy at all?
Yeah, absolutely. So on the first part of that question, I think there's like 2 premises that's worth highlighting. And I think this is quite applicable to some of the listeners as well. And so number one, and I think this sometimes gets mixed up in crypto, is that we're a treasury function. We're not investment fund. So, my main concern is ensuring the business can achieve our growth and strategic plans. And it's sort of my colleagues in the finance department's responsibility to ensure we have the runway to get there. So our goal is more like predictability. And the second one is, as a crypto company ourselves, we already have a very high beta to the market, given our customers are mostly crypto investors, and we also have some of our revenue coming in crypto. So when we set out the strategy or the portfolio allocation, we need to take that into account and potentially hedge that actually long bias that we have. I guess that's somewhat analogous to how Norway is naturally long oil from the North Sea. And, the Norges Bank, the sovereign wealth fund that I used to work with, is investing that revenue exclusively outside of Norway to diversify that sort of treasury away from its long oil bias. And so taking those 2 arguments together into account, what we think is a sensible approach is something of, or sometimes called like a barbell portfolio strategy, that typically has the 2 widest aspects of the risks, like 90-10 split between very low conservative investments and a little bit of high volatility. And I think this is something that's worked well over the last 3-4 months, and it kind of precisely why we chose it is the kind of scenario that we have seen now, because our downside risk has been limited and there hasn't been any impact to our business operations on the back of these events. And so that said, it's been pretty clear that we had to reconsider some of the expected returns and risks associated with some of our positions and counterparties.
And given your visibility into just the information that's available on these public blockchain and the infrastructure that underlies a lot of the investments that you're making, kind of in the digital asset space, do you have a different risk assessment or approach when you look at on-chain versus off-chain assets? Or I would imagine that the fundamental principles are the same, but potentially your visibility or your underwriting, for lack of a better term, of a particular investment could be different based off of the information that's available.
Yeah, agreed. And I think To some extent, yes, there is a little bit of a difference how you approach risk for on-chain and off-chain assets. I think the most important thing to recognize is that the risk that you normally wouldn't consider as risks or actual risk in traditional markets are definitely something you need to take into consideration for on-chain assets. And I guess as a previous trader, you have good risks and bad types of risks. And so what I mean by that is, what are the risks that you should take? If you get sufficiently paid for taking it and you can actually still reverse it or undo it later, then that's a good type of risk to take. But if you're not getting paid, or should I say sufficiently paid for the potential loss of a decision, be it putting it on a centralized exchange or a centralized lender or in a pool where you can't get out, it's hard to justify because it might not, fit in your portfolio and your risk being a treasury manager. And so the very least, make sure you diversify these kind of risk to your business need. And maybe some specific differences would be, you rarely see operational or infrastructure premiums in traditional markets, and generally very few defaults. But in crypto, these are in fact quite frequent, and so it's quite important to recognize these. And as always, don't put all your eggs in one basket. But more importantly, this isn't just something that's obvious now. This is something that we've been looking at and monitoring our counterparties. And how you do that, I guess, differs a little bit between on and off chain.
So in this new world of transparency, where you're able to see a lot more information, at least on chain, what wasn't, what do you think is, more visible, or how does that change your approach to treasury management? Do you have any new, levers that you pull or analytics that you look at that kind of help guide your decision-making in different assets?
Yeah, well, it's pretty exciting to be part of a team of, I think we're about 130 people now that all are trying to surface these kind of signals for investors in this space that is just a continuous stream of new ideas and improvements. So I guess one good example is from a portfolio perspective. What's very important and a key part of my role is to monitor liquidity flows in instruments and platforms we've invested in. And we use the same tools as Nansen subscribers have access to. And we have alerts on for any type of significant movements that could cause us reconsider our investments. And these are actionable to us and anyone else that's invested. So, there's more transparency, but that makes for better due diligence. But, it also increases the speed to act as things unfold. And I think another critical part is risk assessment again, and the fact that you have different tools now to kind of make up your own risk score on tokens, on DAOs or platforms based on on-chain balances, both for the asset and the liability side. So, in this new world, you suddenly have real-time monitoring capabilities of what was previously just maybe available on a quarterly basis. So, market share, TVL, track record, and how sticky balances are, what's the profitability of the protocol, and all of that, compare that to returns, and you can do that real time. You basically can create your opportunity set and scan for new investments, or at least, set an assessment for how you want to scale or allocate between assets and use that to diversify.
Yeah, I can imagine it's, quite a lot of inputs to your model, which, have different levers that you can pull depending on the types of assets you're looking for. And, as you came up the learning curve in this transition over the last, few months into this new seat, I'm sure it was a lot of new tools and data and information and signal that you previously either were not aware existed or maybe hadn't spent the time really digging in until you had this mandate in your current role. And so I think there's a lot of folks out there, whether they're asset managers or corporate treasuries, neobanks, whoever it might be, that are trying to get exposure to this space, but aren't as sophisticated quite yet as how Nansen has set up their treasury business or manage their treasury. So just curious, any advice out there for the listeners who are thinking about dipping their toes in this space? How can they get a little bit more comfortable with putting digital assets on their balance sheet as they start to ramp themselves up in this space?
Yeah, oh, definitely. And as you say, the key point here, or the alpha leak, is the learning curve, right? So again, just stressing the point that I made earlier, that you don't have to be an investment fund or a hedge fund or a VC to invest in crypto. It's sort of become this market where you have fixed income and an equity market inside digital assets. And so the nice part here is, if you take the time to understand and get comfortable with the new types of risks, smart contract, custody, and understanding these, you have a great opportunity to outperform by taking very limited market risk, in fact. And compounds treasury product 4% is a type of a fixed income product that has little variation with the market cycle. So that's one point. And another one is, it's relatively easy and cheap to get started. So there isn't that much of an infrastructure needed, depending on how comfortable you are with this. Again, it can be challenging for small and medium enterprises to access money markets with high fees from banks. So there is that. So get comfortable is the key message by doing the research, get involved, talk to people. I'm available. You're probably available to have introductions, and that's how you get started, really.
Yeah, I think it can be quite daunting for folks, just because the technology is certainly new, but as you start to peel back layers of the onion, the market structure feels very similar, probably, to what you've seen in different asset classes or markets from your previous seat. And I think that's where folks kind of they stop themselves before they get started, before really digging in and doing research on this space. There's a apprehension to really diving in, just because it can seem quite scary from the outside looking in. But once you start to really meet the founders and speak to the teams and get access to the data and start to set up some of this infrastructure, there's a lot of opportunity out there. And I would echo your sentiment about speaking to the people. There's a lot of great teams and participants who have made the jump like you did from Norges into crypto, and some folks that are kind of straddling the market on both sides that are really here to help be an on-ramp from an education or consultative type of just very willing to share information and insight and help educate folks that are interested in exploring with some great ideas that can be fostered just from a very simple conversation. So I know we're heading up close to time, so I'll have one kind of last question for you. Any areas or use cases that you see as an untapped opportunity that institutions can kind of take advantage of in the digital assets or the analytics space?
Yeah, well, this brings me back to, I think, where we started off on, why I made the switch to crypto. So there are, if you've been in TradFi, you've been in banking, you realize there are a lot of silos and inefficiencies that can, well, at least I believe, can be broken down by embracing the sort of core part of crypto or digital assets, which are these sort of compounding, composable, open source Lego blocks that are just being built and pushed out to GitHub every day, right? So it's pretty awesome and inspiring to think you're part of that. So just being open-minded and getting involved should be a pretty good thing. More specifically, since we're on the sort of topic of fixed income or lending, I think this is one of the topics that will really evolve and be there as part of the next cycle. Call it real world or on to off-chain lending. And there will be a realization, like we just discussed, that there are both the income side or fixed income side of the market, as well as having that sort of extreme upside of tokens or sort of blockchain exposure. And I think which part of that fits a portfolio, again, are you a treasury, are you an investment fund? If you're looking for predictability, looking at the sort of the more stable returns that could be justified if you understand the risks, is definitely something that's meaningful, and it's going to come more of that, I'm sure.
Yeah, absolutely. We're definitely coming out of a cycle of over leverage, and that's washing itself out of the system right now, and in a relatively healthy manner. Of course, there's a lot of pain on the street, but hopefully that brings a lot more discipline and rigor to the space and unlocks a lot more capital and ideas to build a really strong foundation for the next phase of growth for this ecosystem, because discipline is certainly needed, and we are looking forward to this next chapter of crypto's evolution. So I really appreciate the conversation today, Morten. I know we went a little bit past time, but any closing thoughts that you wanted to share?
No, likewise. Thanks for having me on, Jim. Encourage everyone watching or listening to, if they do want the decisions to be data-driven, check out what Nansen has to offer, Nansen.ai. And similarly, those who want to start with a product that's straightforward, relatable to maybe more traditional fixed income, suggest checking out yourself as well, as we have. So thanks a lot for having me, and I hope everyone has a great day.
Thanks, Morten. Yeah, you put my sales hat on. So no, I appreciate the sentiment. Everybody go follow Alex on Twitter, and Nansen's intern is also a great follow on Twitter as well. Really appreciate the time. Thanks again. And thanks everybody for tuning in. This is our first episode of Thesis. We're going to be back soon with another great guest, and stay tuned for updates on who's joining us next. But thanks so much for your time, and have a great rest of your day.